This is case in point what I've done for 24 years. Early on in my career, not very well, obviously, as I struggle to learn. It's very hard to learn, but we saw the initial move up on the Bitcoin dominance to this high that was basically going back to 2021. It hammered on it a few times in early 2023, broke out, and then guess where the low was? It pulled right back to that. And again, I always refer to this, people need to kind of think about it like, think about Napoleon. He got too far away from his home base, and that's kind of, you could argue, at least the history books tell us that's why he wasn't able to continue his conquest. Or, your kid goes to college and, they don't really leave the nest and not come back. They'll come back for Thanksgiving or Christmas. They come back and then they go out on their own again. And that's exactly what the chart did. I mean, to a perfect, like literally, it's basically to the penny on the dominance retrace before it's now starting to go higher. And this is something you'll see in so many charts. Breaks out, retraces to what I call the scene of the crime, and then it gets its energy and continues on its merry way. So, I think you're right on this. I think alts are going to struggle. I think Bitcoin honestly still has some struggle ahead of it, but it's just that alts will struggle more. And I think that, we're starting to see this turn in the labor market too. In fact, I wanted to bring this up. I don't know if you had heard this, but we got a great jobs number on Friday, right? Great jobs number, 336,000, super strong gains. But if you look at the underbelly of it, I was looking and I was seeing that part-time had a monstrous gain. So people getting part-time jobs, and we actually lost full-time jobs. And I also saw a stat over the weekend that said in the last 3 months, we've lost over 600,000 full-time jobs. And so this kind of goes to my point of, is the economy really so strong, or are we starting to weaken?
Bitcoin's recent slump has left investors puzzled. Despite a promising year, recent losses have raised questions. Some experts liken this market to the 2015 to 2017 pre-bull cycle, with $28,000 serving as a significant resistance point. Bitcoin's slump began with significant long liquidations, stemming from a flash crash that wiped out $213.5 million. Liquidity issues persist. Institutional players remain hopeful despite a challenging regulatory environment. 9 top firms await SEC approval for Bitcoin ETFs. Delays may impact sentiment. Macro events, including global conflicts and regulatory actions, continue to sway Bitcoin's price. Ethereum's price has been on a roller coaster. Recent declines have left investors searching for answers. A once-celebrated supply schedule has faced unpredictability, with increased issuance dampening supply reduction efforts. Vitalik Buterin's sizable ETH sale and Ethereum Foundation's transactions have raised eyebrows, though explanations exist for both. Weak demand plagues Ethereum's futures-based ETFs despite high hopes. Ethereum grapples with a mix of factors, from supply shifts to regulatory concerns, contributing to its recent performance. Let's continue our discussion with Gareth.
The inversion of the yield curve and how it's actually slowly getting to the point of being uninverted. And we've, Ben and I have gone on here and kind of clamored to as much as we could to say that the inversion is not what matters. It's the uninversion, when it uninverts. So you've got this very close to uninversion occurring. We're not quite there yet. Then you start looking at the underbelly of jobs and job openings, and it is starting to paint a picture that, maybe not by year end, which is less than 3 months away, but probably in 2024, contrary to what Jerome Powell said, where he said a month or two ago, hey, we don't project a recession. I think it's getting more and more clear, especially with rates staying higher for longer, that we'll probably have a recession. Wouldn't even be surprised if people look back, and this is the tricky thing, right, is that, they're trying to analyze real time, and they're using backward looking data oftentimes. And so, I do give them credit in that it's hard. Well, their job is very, very hard to kind of pinpoint exactly and get that soft landing or no landing. But again, unfortunately, they're human and they're going to make mistakes. And we look back at history, and it hasn't been a great job by the Fed in the past. And, again, I do worry that you have inflation where it is. Let's say we hit a recession next year. How do they come out and print? Do they just lower rates a little bit? But they probably can't come out gangbusters like they have done since 2009 with the printing presses, with inflation still stuck at these higher elevated levels. We have to recognize that a pivot could be like, I could totally see them, like if the stock market, I think we're down 8% off of our recent highs, give or take. If all of a sudden in a week or two we find ourselves down 15 or 16%, they could throw a mercy cut out there to just stem the bleeding, right? Just to say like, hey guys, we've got you, which will reassure the markets, right? But ultimately, can they cut back to 1% on the Fed funds rate in a short amount of time? There is no way they can do that without generating a massive amount of future inflation. And by the way, we're seeing so many kind of, strikes going on, UAW, healthcare workers. We saw obviously some of the other recent ones with increases in salary, and that all is coming through, and that will all lead to people having potentially more money as well to spend. So then you could talk about some of the geopolitical stuff going on, which we're not going to get into, but the question is, does that create any supply disruptions, right? And again, right now it isn't, but there is that possibility as well. So it's an uncharted territory of a market right now, an economic picture, and I think it's one that we have to be on our toes with. And I just mentioned before we started the stream, so I see someone asking what should we buy? I can't tell you guys what you should buy. I could just tell you what I did. And I just used the dip in gold into major technical support right down here to add to my gold positions on Thursday and Friday of last week. So, again, to me, that's a place where it's safer. It's not as volatile as Bitcoin. Bitcoin today, I would just point this out, it is down on the day. So there's a lot of people that argue that Bitcoin is like the digital gold already. It's obviously not, or it would be up with gold today. So it is still somewhat of a risk asset. That's clearly seen by the chart. And so gold is a pure play, right? I mean, inflation is there, fear is there, people run into gold. If you look at the bigger picture, like let's go to the monthly chart on gold, since COVID and since essentially rates started to go up significantly, I mean, look at where gold is in the cycle. It's still so close to those all-time highs, yet yields have gone, or the Fed funds rate has basically gone from 0 to 5.5. And that's very, very unusual for gold to be able to withstand those interest rate hikes. And even the dollar has been relatively strong as well. No, and I think that's 100% right, is that they are very scared, I think, of repeating what we've seen in the 70s and 80s, right? So they're going to be very careful about that. I think they're willing, the thing is, they say they're willing to do a recession. The question is, how bad of a recession? And my biggest fear, and I think we've talked about this before, is that, we may get into a recession that's kind of like not a great, it's kind of not a great environment, but it's not like a 2008, 2009, but it could just last for a really long time because the Fed isn't coming to the rescue. So you essentially have a market that's addicted to free money. It goes into a recession, and maybe they, like we said, throw a mercy cut out there. But if they're not going to drop quickly, then you're not going to get that reflex surge in economic activity. And we could just be kind of stuck in this, stagflation-ish environment I worry about.
Analyst warns of U.S. dollar collapse, predicts Bitcoin owners to benefit. Global financial services firm Jefferies has warned of the collapse of the U.S. dollar paper standard to the benefit of both gold bullion owners and also owners of Bitcoin. He explained that the Federal Reserve and other G7 central banks will not be able to exit from unconventional monetary policy in a benign manner and will ultimately remain committed to ongoing central bank balance sheet expansion in one form or another. 19 distinct Bitcoin addresses from 2012 awakened, moving coins that had remained untouched for over 11 years. Fast forward to this month, and we've already seen 4 such transfers from 2012. This Sunday, at block heights 811,239 and 811,244, 2 addresses from that vintage year collectively transacted 227 BTC, a sum equivalent to $6.34 million using current Bitcoin exchange rates. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.